Hello and welcome to the Zacks Friday Finish Line. I'm Ryan McQueenie, a content writer here at Zacks, along with one of our editors, Maddie Johnson.
Hi, how are you today?
I'm fantastic as always.
Awesome.
Today is Friday, August 19th, and we're here to recap this week's biggest stories. So, we're going to be taking a look at the state of the retail shopping landscape after two giants in the sector, Target and Walmart, reported earnings this week. But before we jump into that, let's talk about how one big decision from some federal officials this week will change the shape of one industry forever.
That's exactly right, Ryan. So those federal officials were the Department of Justice, and that industry is the private prison business. So the U.S. Department of Justice, or the DOJ, announced plans on Thursday to phase out the use of private prisons, which are for-profit prisons. So that will effectively kill the federally funded wing of the private correctional services industry after concluding that the facilities were both less safe and less effective than their government-run counterparts. It's also, I want to point out that this is not going to affect state-run prisons, which they also have a lot of for-profit prisons in that industry, but this is only going to affect federally run prisons.
So just contracts with the federal government.
Right. So there are currently 13 privately run facilities, and these facilities house just over 22,000 inmates. And I was looking at a map, and there are 5 in Texas, which, not surprised, but I thought it was interesting.
Hey, everything's bigger in Texas.
Everything's bigger in Texas.
Including crime, I guess.
Yes. So these 13 facilities are in the Federal Bureau of Prison System. And then Yates, which is Deputy Attorney General Sally Yates said that the Justice Department will not terminate any of its existing contracts, but instead it will kind of wean itself out of these contracts. Right. So they won't renew them when they expire.
Right.
Yeah.
Yes. That's what I thought was I guess probably the easiest way to go about it legally, because there's always certainly ramifications when you break a contract.
Yeah.
Like you said, they're just letting them expire, and apparently the contracts for all 13 of these facilities that are in the Bureau of Prison System will be up for renewal within the next 5 years.
Right.
So theoretically, 5 years from now, all the contracts should be done, and that should be the complete end of the federal government working with these private prison operators.
So two big names in that industry, so Corrections Corporation of America, which trades at CXW, and the GEO Group, which trades at GEO. They both fell about 38% on Thursday.
It halted briefly even for volatility. It was crazy.
Very crazy. But I also have a question on where these 22,000 inmates will go.
Are going to go? Yeah. I have that question too.
So it's not a small sum of people. That's a large population.
Yeah, and it's not like you ever hear about prisons having tons of room for more inmates to come in. So definitely will be interesting to see where the heck all these people go.
Right.
Not my job.
Not your job, but definitely interesting to think about.
There are people who are working on that diligently right now.
Fingers crossed.
Sure. Yes.
So now we'll transition to another kind of industry, but associated with the government. So two huge federal stories.
True.
This week.
I didn't even think about it like that.
Yeah.
Yes, very true.
So the health insurance industry kind of went through a shakeup this week as it attempts to deal with the changes caused by Obamacare.
Yeah, so big, obviously, the implementation of Obamacare has really just changed the whole landscape of that kind of health insurance, health coverage world. And, we're finding it's becoming a little bit more clear that insurance companies are struggling to turn profits on their Obamacare exchanges. Right. So this week, Aetna, which trades under the ticker AET, one of the larger health insurance providers, was the latest in what is becoming a list of these major insurance providers, including United Healthcare Group and Humana, deciding to scale back drastically their offerings within the Obamacare system, within that exchange.
Yeah.
So Aetna is deciding to just stop offering these plans in 11 of the 15 states where it was participating, and is reducing its overall participation from 778 counties to 242 counties
So
in
it seems like
2017.
drastic is quite the understatement.
Yeah, drastic even could be an understatement.
Yeah.
I mean, almost eliminating it, I guess. So this comes after a few weeks after their most recent earnings report, in which they, looking forward, said that they plan to lose, or they don't plan to, but they expect to lose about $300 million on their Obamacare business this year.
It's a big chunk.
Yeah, that's a big chunk. And this was a company that beat earnings. So this is a company that didn't necessarily have a poor earnings report, but was like, it could have been this much better if we could make any money on these people.
Right.
And so we're seeing insurance providers struggle to turn profits with these plans because the people who are purchasing these plans are getting more sick and are more expensive to cover than people with employer plans. So yeah, I actually have the figure here. People who are covered under Obamacare plans more prone to serious diseases and on average cost 22% more per month to cover than those with employer plans. So that's no small figure that they're seeing consistently across the board. People buying these Obamacare offerings are just more expensive to cover. These companies are kind of lobbying the government to raise premiums next year. But for now, in a lot of counties, the options are slowly dwindling, which obviously, for the consumer, you in almost any business, you'd like to see options. That typically helps with costs and consumer behavior.
And I mean, these people that are more like the people who are purchasing these plans, they are more expensive to cover, but they are the ones that seemingly need health insurance the most, which is, I guess, for me, that's frustrating to see that Aetna is pulling out.
Yeah.
It's a little bit of a juxtaposition, if you will.
Yeah, it's definitely an interesting point that we're getting to. It'd be really interesting to talk to. This is going to really blow your mind here. Really interesting to talk to President Obama about this. Be interesting to talk to President Obama just in general, but it would be interesting to see how he feels about what I'm assuming is an unintended consequence of this bill that now bears his name in common terms. So I don't know. It'll be interesting to see what the future holds. Obviously, I think both presidential candidates are calling for healthcare reform.
Definitely.
That's going to look very different, obviously, based on who gets elected and what Congress looks like. But it could be anything from a repeal of Obamacare to a expansion, a public option, a lot of things that could happen.
Yeah,
so
definitely.
Something probably will change sooner rather than later because, I don't think that any proponent of healthcare reform wants citizens in, these smaller, more rural areas having one option and one option only. So certainly not good for business, certainly not good for the consumer.
Yeah.
So yeah, as promised, we will get into some major retail stocks in a bit. But first, I want to check in on everyone's favorite private company, which is now just how I'm introducing it every time I talk about it, because it's what I've deemed to be the truth. So everyone's favorite private company right now, and that is the ride-hailing extraordinaires over at Uber.
Oh, Uber. Just always keeping it interesting. So
maybe we should have we should have a new intro for when we talk about Uber, and we should do it every week because it seems like Uber comes up a lot for us.
Almost on a consistent basis. Yeah. So on Thursday, the company said it would be taking legal action against Transport for London, which is the city's transport regulator. and they want to block upcoming regulatory changes that would hinder the recruitment of new drivers.
This is let's talk about these changes because this is a doozy. This one made me scratch my head when I
So
read
one
it.
of the new requirement for drivers includes passing a written English language test to operate a private for-hire vehicle, as well as English writing skills. Makes sense. I guess TfL wants to modernize the whole for-hire taxi industry in London. So these private hire firms must also run a London call center, and drivers are required to have insurance for their vehicles, even when they are not being used as private hire cars.
So were these regulations attempts to modernize the industry in London, or were they attempts to push Uber out of the industry?
That's the real
London?
question. It seems
the one that
very fickle and very specific.
And definitely something that is going to have some legal pushback. So Uber is the one kind of taking it to the legal world, taking the legal action against this TfL. But it seems like something that would obviously raise some legal question marks.
Legal questions and ethical questions.
The one that jumps out to the page for me is definitely the passing a written English test, written English language test to operate a vehicle. I mean, and English writing skills. I'm not sure how the English writing skills apply to
driving.
Can I get from point A to point B safely?
Yeah. I mean, in researching this story, I was reading an article by Quartz, and they cite Uber as saying that these regulations are more difficult than the citizenship test for Britain.
Okay.
Which may be an over-exaggeration, but I think they do raise an interesting perspective.
Yeah, also, like, I don't know. I feel like I know a lot of people that would struggle with any level of an English language written test.
Not the easiest language to learn.
And I just don't see what it has to do with driving cars safely.
So I think Uber does have some right to be a little bit outraged.
Sure. And this is coming from someone I completely understand the regulatory pushback that Uber has received in most cases.
Yeah.
And I feel like it's pretty reasonable for these kind of regulatory bodies to try to level the playing field a little bit for the traditional taxi services against Uber. This, on the other hand, does not seem that fair to me, but that's just
not fair for
opinion.
Uber, but also not fair for drivers who want to make a little bit of money on the side and maybe doesn't speak English that well.
Well, yeah. I don't know.
So, but moving on to a lighter announcement from the company, Uber has acquired self-driving car startup Otto. So this company specializes in self-driving trucks. It's a 90-person company, and its co-founder, Anthony Lewandowski, if I'm saying that right, he will now lead Uber into the self-driving car market. So he will head Uber's self-driving car initiatives from now on.
Oh, okay.
Yeah, so if all of the deal's key goals are met, the acquisition could potentially be worth 1% of Uber's current valuation, which is, I believe, is $68 billion.
Okay.
And that's a whopping $680 million.
Quite the paycheck for such a small company.
And I think that Uber, it's taking on all of Otto's workforce. So I don't think I'm not sure if any cuts are being made, but I think they're going to kind of scoop them all into Uber.
That's good.
Which is pretty cool.
That's interesting. And this is not necessarily Uber's first foray into the self-driving car market. We heard about them partnering with Carnegie Mellon, I believe was the school.
They have I think they have a firm or a research institute in Pittsburgh.
Yeah, they were
believe.
driving around Ford Fusions.
Yeah.
Yeah.
This week too, I think they just launched a new fleet.
Interesting.
Uber is definitely becoming a big competitor to Google.
So eventually is the robot driving the car going to have to pass an English written test before it can pick me up in London?
If robots turn into fully functioning AI entities,
because now I'm seeing
maybe
I'm seeing in a world for Uber where this English language test doesn't really matter because there's no driver in the car.
Exactly. So no more lawsuits.
Yeah,
and
something interesting about this self-driving car world is these headlines are becoming more and more frequent about these big name companies investing in self-driving vehicles, testing out self-driving vehicles, Tesla launching their autopilot last year. This is creeping up on people, and I think that it could surprise some folks just how quick this is going to
You're going to be able to like
a
purchase,
reality.
Yeah,
a reality and a cultural norm. So,
exactly. Like, oh, do you want just your conventional, traditional car? Or look what we have. You can just get a car where you can be on your phone and it'll drive
and
for
obviously
you.
it'll be interesting to note how the government goes about regulating that, and how long it takes manufacturers to get this technology into cars at a price level that is affordable for
the everyday
consumer. So I guess we'll see it, and Uber will be at the forefront of that revolution. So, all right, I think we'll move on now to the
earnings.
Yes. So first we'll look at Target. We're kind of coming up on I feel like I've been saying for the past 2 or 3 weeks now that we're coming up on the end of this earnings season.
Yeah, this past week has been busy. But
There's always earnings reports.
Always earnings.
This last week was more of there was several big retail.
It was like the second wave
companies.
of them. Yeah.
And we saw these kind of big value stores like Target being the first one we'll look at report this week. So they announced second quarter results on Wednesday morning. They posted earnings of $1.23 per share, beating our Zach's consensus estimate of $1.14. Despite that earnings beat, however, Target missed revenue expectations. So the company saw quarterly revenues of $16.169 billion, falling short of our estimate of $16.24 billion. And that those revenue struggles were brought on by weak comparable store sales. So comps were down about 1.1% in the quarter, and just overall less people in the stores, it looks like. Total transactions were down 2.2%. And the most interesting thing to me about Wednesday for Target was the earnings conference call where executives took to the phone to explain why comps were so weak this quarter. And they pointed at some interesting reasons, and 3 specifically notable things they said this is problem 1, 2, and 3. And so the first was overall electronic sales. They saw a double-digit decline in electronic sales.
Wow.
Which was driven by a 20% decline in sales of Apple products.
It's a very specific culprit.
A very specific culprit, and also not great news for Apple.
No. Does this, this can't mean people don't want Apple products.
Well, it certainly means they're not going to Target to buy them.
Yeah.
Apple has, been struggling over the last couple of quarters with iPhone sales and whatnot. It's been something that we're talking about now for really the first time ever.
Right.
Just the norm was consistent growth in iPhone sales, and now that is not the norm anymore. All we know other than that 20% decline is that Target is working with Apple to work on strategies on how to increase sales. So it might be a way that it might be how their marketing is contributing to it.
Yeah. Which
it certainly implies a loss of demand for Apple products, though.
Yeah.
Target is is a big chain within electronics. It's not like they have a weak electronics section.
No.
Going to Target to get your electronics is certainly a viable option.
But so when I go into my local Target, their Apple section, it's not like it's marketed to the full extent that it could be. So if you think of Best Buy and how they set up like their laptops and they have like a huge Apple section, that could be something that Target could look at doing or mimicking.
Yeah, trying to create this more well-defined area for Apple shopping.
Yeah.
And those are the types of things I'm assuming they're talking with Apple about.
Yeah.
Those are the types of kind of strategies Apple, I think, would be suggesting. Interestingly enough that we bring up marketing, though, because they also blamed marketing for another one of the reasons that they saw comps were down, which was weak sales of groceries overall.
Which is not new for Target.
Sure. So obviously Target, you can walk in and get just about everything, which is also the case with Walmart, which we'll talk about in a second. But yeah, they blamed just weak grocery sales, and they kind of said that this weak grocery sales issue is causing them to rebalance, I think was the word they used, rebalance their promotions and marketing and stuff, because they felt that the pay less portion of the expect more, pay less was getting lost on people. And so they really needed to reinvigorate that aspect.
So it was not low enough.
Right. So I don't know. I don't know where Target ranks on how people perceive the value shopping options. I've certainly heard some jokes that you pay a little bit more to go to Target so that you don't have to go to Walmart, for the people who aren't fans of shopping at Walmart.
I've heard that too, yeah.
But expect more, pay less is the tagline. So, maybe trying to refocus on that pay less, as they said. So, and then the third thing was they recently partnered up with CVS pharmacies to put CVS pharmacies into Target stores.
Right, I have noticed that.
And they said that partnership is off to a slow start. Customers are not signing up for the deals and promotions at a very high rate at all with the CVS's.
I
think they kind of justified that as saying this is a big partnership. It takes a lot of time for customers to adjust to this new thing in the stores. But yeah, I think slower than expected start was kind of what's going on with that.
Gotcha.
So those would be the three areas looking forward that Target could improve on, and definitely a mixed bag of results from them this week, which I think was also the case for Walmart.
Yeah, so for Walmart's second quarter of its fiscal 2017, it posted earnings of $1.07 per share on revenue of $120.9 billion. Walmart beat out the Zacks estimate by 5 cents for its bottom line, while its revenue figure grew 0.5% year over year, and also beat our estimate by 0.7%. So despite these beats, they did see declines in international sales in its Sam's Club, which is similar to Costco. It's a wholesale retailer. But these were mostly offset by strong growth in its United States division. So these beats, I think it's a good sign for Walmart as they kind of move into e-commerce. As they're able to balance out the costs that come with building a strong online presence with growing their brick and mortar retail sales.
Definitely something that we look to with the earnings figure, because that's where we see, okay, how well are we turning profits? And I think that's the main concern with when you invest so much in e-commerce as they have is, all right, well, is this cutting into profits?
Right.
And so for them to be able to post an earnings beat is a good indicator that they are still, turning good, solid profits.
Yeah. So looking ahead, its guidance for its next quarter, they expect earnings in the range of 90 cents to $1 per share. But that would be down from the comparable quarter's earnings of $1.03 per share. But it's also in line with our estimate of 94 cents per share. And
that's going back to what I just said, I guess, is kind of the the mixed signals aspect of it.
Yeah.
Is that, yeah, they posted this earnings beat, but now, looking forward, we're looking at, a 10%-ish decline in earnings year over year for the third quarter if they're able to fall in that range that they kind of announced for themselves this week, which is why I think the stock gained about a 1.5%, I think, right and immediately after the report, because I think looking at earnings revenue beats, that's good news. The market's going to react positively to that, but I don't think investors were too blown away by the guidance in the report.
And I'm not sure investors, for the last few quarters, I'm not sure if Walmart has managed to blow away its shareholders. Mm-hmm. So I feel like these results are good, but almost to be expected and nothing to get too excited about. Mm-hmm. And we'll also have to look at next quarter how Walmart's purchase of Jet.com will influence its performance and especially its comps. Yeah,
and looking at, again, that's a big thing with e-commerce. How much business is that going to bring in?
Right.
With online shopping. And how much of a presence, how much of a market share in this e-commerce world are they going to have over Amazon?
Yeah. And I will have to say something about Walmart's website is I do think it's manageable and I do think it's easy to navigate and to find the things that you want, which is kind of the opposite of going back to Target. Their website and their online presence is not good. Mm-hmm. And it's definitely something that they could improve a lot and definitely funnel some funds into kind of creating and expanding that presence. Mm-hmm.
And so that's what I think, taking a step back just to talk, because these two massive chains like this are going to paint a good picture of the state of retail, which also it isn't the end all be all, but it definitely is a statement about the overall health of the economy.
Definitely.
These are the types of places that are going to see the consequences or effects of consumers either having a lot of money to spend or not having a lot of money to spend. So when we see something like Walmart beating earnings, beating revenue, and saying, hey, we had strong growth in the U.S. division, that's at least telling us something about the fact that U.S. customers are going to Walmart to shop, and they're doing it at a level that's resulting in good results for Walmart, and good, strong growth, as the company said in the earnings report. A decline in international sales might say the opposite about the state of the global economy, and might kind of reinforce what we've been saying almost all year now, which is there's a lot of uncertainty in the global economy. Mm-hmm. But at the same time, looking at Target missing revenue expectations, we don't have this universal agreement, and we kind of have to look at reasons like Target pointed to for why they saw weak sales this quarter.
Yeah.
And go, okay, so do any of these things that Target pointed to say anything about just the overall behavior of consumers right now? And I think the only thing I can think of that applies across the board is this decline in sales of Apple products. When we talk about consumer, they're not selling as many groceries because they're not marketing very well. That's a company specific issue.
Yeah.
Their partnership with CVS Pharmacies, company specific issue. So definitely interesting to note. It's definitely not like a giant green light saying the retail landscape is great. It's not saying that it's also not a very bad sign for the retail landscape. It's like I said, a mixed bag of results this week. And definitely, now we have several things we can keep our eye on going forward for both of these companies and that overall behavior of consumers right now. And so with that, basically everything we have this week. As always, you can find the links to the articles, or the links to all of our coverage in the articles. And as always, thanks for listening, and we will see you next week.
Yeah, thank you.